Welcome to the Central Kentucky Market Minute, your local real estate update. I'm Kalen Studler, broker and owner of TransactionBroker.com Real Estate and president of Studler and Associates Incorporated Real Estate Appraisals. This show gives you a quick update of local housing market insight, so let's get started. Over the past 30 days, 32 homes have sold in Franklin County, down from 38 the previous week and below the weekly average of roughly 50 since late May. This slowdown points to a gradual cooling in the local housing market as we head into fall. Active inventory currently sits at 138 residential listings with an absorption rate of 23% and about 4.3 months of supply, signaling a shift away from the strong seller's market we've experienced over the past couple of years towards a more balanced conditions. Homes are spending an average of 29 days on the market with a median of just 16 days. Well-priced homes are still moving quickly, but buyers are clearly taking more time to make decisions. 21 price reductions were recorded last week, reflecting that changing dynamic as sellers adjust to a more cautious pool of buyers. On the pricing side, Franklin County continues to outperform the state. Year-to-date data from the Bluegrass Association of Realtors shows the average sale price is up 16.01% and the median price is up 6.69% compared to the same period last year. By comparison, the Federal Housing Finance Home Price Index shows Kentucky statewide appreciated at 4.9% through the second quarter of 2025, meaning Franklin County is still seeing above average price growth even as transaction volumes cool. According to Freddie Mac, the 30-year fixed rate mortgage has eased to 6.34%, while the 15-year fixed sits at 5.55%. This comes shortly after the Federal Reserve's 25 basis point rate cut though mortgage rates have edged slightly higher since. Here in Central Kentucky, local rates are averaging around 6.04%, depending on factors like credit score, loan program, and down payment amount. On the lending side, the latest Mortgage Bankers Association survey shows purchase and applications up 0.6% and refinance activity up 0.8%, resulting in a composite index of 0.8%. Overall, the numbers reflect a typical seasonal slowdown paired with ongoing affordability challenges, even as borrowing costs continue to ease. Compared to earlier this year, now let's shift gears for a moment. I had the chance to sit down with Representative Ericka Hancock, who not only serves here in Frankfort, but also works in the insurance industry, to talk about some real estate, housing, and some of the issues shaping our local market. Let's jump into that conversation. This week, I'm joined by Representative Ericka Hancock, who serves Franklin County in the Kentucky State House. In addition to her legislative work, she is also an insurance agent here in Frankfort. Today, we're going to talk about a few bills that didn't pass last year that I'm hoping will come back around, and her perspective on the real estate market and how insurance connects to home ownership. Thank you for being here.
You're welcome. It's nice to be here.
So before we really get started with some questions, how about you just go ahead and tell us a little bit about yourself and your insurance and being a state representative.
Yeah, well, again, thank you for having me today. My name is Ericka Hancock. I have been a State Farm insurance agent since for 24 years now. I was actually one of the youngest ever hired at 22 years old. Just graduated college, and the opportunity for Sally Hill Stumbo was retiring, and just kind of mentioned my name as somebody that would want to come in and take over. And I quit my job. I was working in Louisville selling Yellow Page advertisements, and came and started working for Sally and ended up getting the agency in early January 2001. So that is my day job. And here recently, I am a freshman state representative at the Capitol. My predecessor was Representative Derek Graham, and have been there enjoying that. I have two now adult children. My son just turned 18, and my daughter's 21, and my husband and I just had our 25th wedding anniversary last week. So lots going on in the Hancock family this year.
So you just had your anniversary was last week.
Yeah, well, the anniversary is 2 weeks ago. My son turned 18 on the 17th. So
So
yeah,
no
lots
vacation
going
yet.
on. Do
No
what?
anniversary. No anniversary trip yet.
No, we've got some trips coming up because we've got some friends turning 50 as well. So we've kind of put those off. Mid soccer season, getting kids back to school and everything. We just couldn't find the time to do it now. So
Don't blame you. My youngest is 25, so I don't miss the high school stuff. And
we're senior. I've got a senior in college and a senior in high school. So we're excited about the next step. I've got two fantastic kids that are really going to make a difference. So
yeah, empty nesting is actually quite nice.
I've heard.
I before I had when my oldest son got out of high school. That one was slightly depressing, but by the time my third one got there, I was like, please go,
Yeah,
go,
I'm
go.
done.
I'm done.
It is definitely the best and worst job you'll ever have as being a parent. That's for
Yeah.
sure.
Well, grandkids is great too, but
I've heard that too, but
um,
I'm going to be way off on that.
yeah, I'm suggesting they wait, but I've
Yeah,
already got a few and they're great.
that's fun. That's awesome, Caitlin. Congratulations.
All right, so we're going to talk about your role on the banking and insurance committee, and just a few questions there that Kentuckians might be worried about or just want some more clarification on. So I want to preface this: there's no pre-filed bills anymore, um,
Mm-mm.
which kind of makes the interim committees kind of boring, I would think, because
Mm-hmm.
they used to go over these and you could see what's happening. So. It's hard to see what might come about in next year's session until session starts. So
Mm-hmm.
I would hope that we could change that.
One of my colleagues has been filing a bill to bring that back because it does allow for more transparency and a little bit
Mm.
more prep work. So yeah, I think we should definitely go back to pre-filing bills just
I,
because I think it gives more input out there for the folks in Kentucky to have their voices heard.
well, yeah, the transparency part is what I really, really, I just think is great, especially with I know a lot of people think that we argue over the big things, and they do, but I've watched a lot of things. About 90% seems like it's bipartisan anyway, and
It really is. I think that's probably been one of my most pleasant surprises is realizing that almost everything we do is good legislation, good work, thoughtful, with good, healthy discussions. And that's probably been my most pleasant surprise up there for sure.
all right, so here's a question about mortgage accessibility and lending regulations. And again, there's nothing going on out there, and if there's really not a great answer, I'm good with that. But
Mhm.
right now, one issue we often hear about in the real estate community is the challenge for first-time home buyers faced with financing, especially with stricter underwriting, student loan debt, and rising interest rates. Has
Mhm.
the Banking and Insurance Committee looked into any proposals to improve access to mortgage lending for lower and middle income Kentuckians?
Well, I mean, I think that you did talk about the bill with the savings account, but you and I were in our 20s able to buy our first house.
Mhm,
Jeff was 20 when he bought yours. You just mentioned that you were 20. That doesn't happen anymore.
mhm.
We have a situation with a housing crisis of just available units, as you know. So we've got a shortage in Franklin County of almost I think the projected by 2029 is over 4,000 units, or around 3 to 4,000 units down. So we need to get more housing. So we need an affordable housing for your younger families. I mean, there's some houses that you and I would have paid $60,000 for, mind you, 20 some years ago, that now are over $200,000. And that's just definitely something that's on everybody's radar because we know that is a predictor of future financial success. You start building that equity, you build that home ownership, you build that. I mean, it's just all the things that come with home ownership. So we've only had one banking and insurance interim joint committee, and we discussed it was more health, it was all health insurance related. But I do know there's a housing task force that is tackling a lot of these issues for affordable housing, and I think it's multifaceted when it comes to incentives like the tax incentive for the savings account, which I think was that House Bill 195,
Mhm.
that you can get tax credits for saving. And it's there to encourage folks to have that down payment so that they can have that down payment when they go to buy a home. But we got to have houses that are affordable. I mean, we can't have a $400,000 first time home. It's just
Mhm.
not the way our young families are going to succeed in becoming the American dream of owning a home.
Yeah. And you were mentioning, just for relevance sake, I paid 74,9 for a brand new house, 3 bedrooms, 2 bath, 1 car garage in Silver Lake.
Mhm. Yeah.
Was my first home. And
Yep.
I, of course, market appreciated a little. I made a little money when I sold it, but I mean, that's long gone. You mean,
It is long gone, and we need it. I mean, it's just something that's necessary in order if we want our young families to be homeowners. So, I do know there's lots of talk about the housing shortage, the housing crisis, getting more units and more affordability, and figuring out ways to do that, especially for our young families.
so this one right here is kind of close to Frankfort, but it would we had a huge flood this year.
Mhm.
So your job in insurance was probably super busy, and I'm sure you can tell us a
Mhm.
little bit about that. Um, is there any effort to modernize or regionalize Kentucky's disaster insurance and flood zone policies?
There is a mitigation task force that they're working at different abilities. I'm not sure as far as because all of your flooding is covered under the National Flood Insurance Program, so it's completely separate from like what I do here at State Farm. State Farm would handle more of the tornadic activity that we've seen an increase in your wind, hail, those types of things. But as far as the National Flood Insurance Program is definitely something that needs needs revamping. I I don't typically like to write it because it's very limited in its scope of coverage. It's very expensive. I still have folks waiting on checks
Uh,
from the April event with zero customer service responsibility. It's very frustrating. I have some ideas as far as like some states do like wind pool deductibles. They actually go ahead and start earmarking money so we don't have to wait on the federal government to kick in immediately. We can go ahead and have some state funds set aside so we can go ahead and start getting folks back in their houses quicker. I mean, there was such a delay here in Frankfort with electrical inspections and different types of regulations that I think we need to sit down and really take a serious look at because the ultimate goal when one of these events happen is to get folks back in their homes as quick as possible. But as far as like a regional consolidation, I think that that's just the nature of the National Flood Insurance Program. They basically just look if you're by a body of water. So we pay the same type of rates as you see in other areas that are coastal that are susceptible to flooding. So I mean, I think that it's not it's a broken system, but I'm not there isn't any insurance companies that are going to insure at least privately insure these areas because it's a guaranteed loss. I mean, it's not a matter of when it's not a matter of if it's when these events are going to happen and they're getting worse. They're going to happen again, again, and closer and closer. I mean, we had those two floods. We had one in February in Eastern Kentucky and turned around and had one in April. So I think we're, again, we've got a mitigation task force that's headed up by Senator Webb, and she's in Eastern Kentucky and has been to Amsterdam and look at different ways to help mitigate the severity. A lot of these buyouts, taking some of these houses down and having the area for the water to go should help some of that here, especially in our downtown area.
yeah. Well,
I
one
don't know
more.
if that answered that question, Kaylin, because I don't think there really is a consolidation of the insurance. I think it's already kind of consolidated in the National Flood Insurance Program.
Well, I think that explains that to people who might still want to live down on Big Eddy or in
Yeah.
those sorts of places. I think there's always a draw for some people that just want to live on the river, and that's a risk they take. But of course, they got to pay that extra for the flood insurance. But
Mhm. And we lived down there. I mean, Jeff and I lived on the Kentucky River. We loved it. I mean, it really is a beautiful place, but it is a risk you take,
Mm,
especially with the erosion of the ground down on Big Eddy. I don't know if you saw pictures. There's several houses condemned. It's just not going to be the same. I think, river areas are usually more for kind of cabins, and that's kind of how Big Eddy started. It was river cabins that people just loved it down there. The neighborhood was great, but again, it is a risk you take, and you hate to see people go through what they've been through.
yeah. I've spoke to a lot of people as far as on the appraisal side. People just calling needing to know what their house is worth as is, or some of them wanting to know what it's going to be when it's finished. But they're all still waiting on um, insurance money.
No, I did. I mean, I was on hold today again. I mean, it's been since April that I mean, it's very frustrating. That's for sure. Every time I talk to somebody at the National Flood Insurance Program, I tell them if I ran my business the way that it's run up there, then I would be out of business because but it is what it is. It's a government funded insurance. So it's definitely not the type of service that I want to give my
Right.
customer.
All right, one more question on the banking and insurance side here. And some of this might kind of get into cybersecurity a little bit, but has there been any focus on curbing real estate related fraud, such as predatory insurance practices, wire fraud in closing, or fraudulent deed filings within that committee? Or has there been any talk or?
I haven't heard anything about that in committee, but that doesn't, I mean, we've only had the one meeting. Um, we've There's definitely regulations in place for consumers to feel safe when they have a real estate agent. I mean, you all have an ethics code of standards that you all abide by. You have the same ones that I do. I mean, we know that there's practices that we talk about yearly in continuing education to make sure that we are doing what's right. I mean, are there going to be bad actors? Of course, there's always going to be bad actors. So we just got to make sure that those regulations are in place. And I would assume that I've not really heard it a major issue. You could probably tell me that we've been out of the real estate industry for a while. But I feel like with the online stuff, you probably opens up a little bit more of those types of predatory insurance. Um, I don't really see that here in town. I think most real estate agents are pretty good at either referring a couple different, or if the people already had insurance somewhere. I don't really feel like there is any of that going on in our town.
Well, I don't necessarily feel like that either, but I guess you see a lot more advertisement, especially for the fraudulent deed filings or house
Hmm.
stealing, as they call it. I
Yeah, and
don't.
I did hear about that, and I forget where I was, so you'll have to forgive me about the deeds and the issues there, that people were filing deeds. But I think I talked to Jeff about it, and Jeff was like, it's really hard to do. And I
Mhm.
think they even have some safeguards in place down there at the clerk's office to help mitigate those types of fraud, that type of fraud.
All right, so let's move on to specific insurance questions as related to real estate. Um, as an insurance agent, what are some of the most common gaps or misunderstandings you see that homeowners make with their insurance policies?
On their homeowners insurance, I would think that the biggest mistake is just making sure that you're properly insured to value, and that your policy is a replacement cost policy. That you can go in and shop. There's several companies that will offer policies that are actual cash value. And what folks don't understand is everything is depreciated at that point. So if you have a roof claim, you're only going to get paid minus the depreciation. You're not going to get paid replacement costs. So making sure that you have that replacement cost endorsement so that when you do have a claim, you get replacement cost. And making sure that the value of the property is valued correctly, and check those coverages. Your insurance agent should be willing to review those coverages once a year. The other, like a lot of times when you go buy it, like if you were to buy an insurance policy on that first house you bought and you only paid 70,000 for it, well, now to replace it's not 70,000. So our policies with State Farm actually has an inflation index built in, so it does increase every year with the pace of inflation. That's a really good rider to have on for folks who have been with companies for a while. Because if you had left your policy and it didn't have it, and you had $70,000 on your house, Kaylin, and it burned down, it's not going to replace your house. So
No.
just making sure you have those and review them regularly, and check those deductibles. I think also folks need to understand that we always recommend a 1% deductible. So if you have a $400,000 house, you have a $4,000 deductible. And that keeps your rates lower because you are taking responsibility for the first 4,000. And we try to educate our clients into being that your homeowner's policy is designed for major catastrophic events that you couldn't recover from, like roof damage or a tornado or fire, things that you couldn't recover from financially. So encouraging those higher deductibles and making sure that we're not using them as a maintenance policy, more for catastrophic loss.
All right. So now I got one about vacant property and rental coverage. How do insurance needs shift for vacant homes, short-term rentals or Airbnbs, or investment properties? And what's the biggest mistake that new landlords or flippers might make with those policies?
Well, there are three different things actually. Vacant properties are a potential hazard. So State Farm does, we don't even write them. If they're vacant, it's not something we can write. If they're vacant less than a year, we can add an endorsement to keep them on the books until they either sell them or get somebody in there. So that would have to, most of those are gonna have to go secondary market, which is your Kentucky Fair Plan is an example of a market where we can stick them. I've had my own property in there before because we have real estate that has sat vacant for a period of time. So vacancies are, I mean, people go in and steal things. They steal pipes. They steal. So there is a hazard for vacant properties. So most companies are just not even going to touch those. You have to go secondary market. The short-term rental market has been interesting. We write ours like a hotel more so than a rental dwelling, which I don't really, I think it's still so new that really companies don't realize how it changes actuarially the chances of loss. We have an Airbnb. So I get to, it went from my rental, if I had done it as a long-term rental to the Airbnb, it's almost triple the insurance,
Really?
which is frustrating. Yeah, at least with State Farm. So I think that it's some people, like if you have it in your basement, it doesn't, it looks at it differently versus if you have a standalone house. But making sure you're protected there with higher limits of liability, because you have this turnover, so you don't really get to know these people. So if somebody slips and falls or those kinds of things, you want to make sure you're protected there. And then what was the other question? It was just regular rental market.
They're just flippers.
So even that, I've had to write a lot of those because usually when you're flipping them, they're vacant. So we write them, and like Kentucky Fair Plan is actually an actual cash value policy. So I keep, I think one of the biggest mistakes is when you go in, if you pay 70 for it, and if you go in and put 100 for it, you need to make sure you're updating your insurance along the way so you don't have that gap in coverage.
All right. So I want to go back to something we were talking about cost, making sure you're insured for the right amount. How do you guys come up with your cost?
We
Is
have an
it
independent calculator that we enter in certain characteristics that gives us a replacement cost structure that's very accurate. All insurance companies will have. Ours is, I forget the name of the software, but it's probably very similar to the type of software you use in
Mhm.
appraisals. But it doesn't, our appraisals don't take into account, because you don't need to insure the lot it sits on, because if the house burns down, the lot's still going to be there. So we take that out of the equation, and then the depreciation isn't included in ours because we are an replacement cost policy. So we're not going to depreciate that in that calculation, but it's pretty accurate.
Is it Marshall and Swift?
I do what?
Is it Marshall and Swift?
No, it's some 360. I'm not sure if it's a State Farm internal, but it's a calculator. And it's, I mean, most insurance companies, like if they come here, all their calculations are all about the same. It takes into consideration, type of construction, if is it the age of the home. It takes into calculate brick or frame, just all the things. If it has the basement, if the basement's finished, so square footage, and then it just spits out a number. Um, course, as you know, and I mean, things have gone up quite significantly. I think when I first started, it was between 75 to 100 a square foot, and that is not the case anymore.
No. Just a quick story, and I won't rat out, you haven't called me on this, but I've had local agents call me. Somehow they've got a hold of my appraisal and they're looking at my cost approach. And I'm like, y'all need to do your own work. Mine is separate from that. And
Yeah.
I
No,
would,
we will
I,
use a cost price new. Like on certain appraisals, if you do an actual cost price new, that usually is that number is really close to what our calculations come up to.
yeah, I don't like being on the line for it because they're not
I
my
get it.
intended user.
Yeah, I get it. I get it.
So we're going to talk about House Bill 195. This made it to committee, but didn't even go any further. So just a few questions about this. I'm really the Kentucky Realtors were really supportive of this. I'm hoping we'll see it again. It might need tweaked somewhat, but we talked about it briefly. House Bill 195 proposed a savings account incentive for first-time homebuyers. From your perspective, what are the biggest hurdles to get this bill passed next year?
I think the reason it probably didn't go any further last year is because it is a budget related bill. So I think I mean, I think that was probably the only reason it didn't get moved out of committee last time. What I would suspect that will probably happen, Caitlin, is there's going to be several home related bills. So that it'll probably get lumped into one of those. So that's what I would be on the lookout. I don't know if standalone, but I do think it'll get stacked into something that's intended for all affordable housing and just trying to figure out this because it's a multifaceted approach we're going to have to do. And I think it's a great piece. I mean, I think it teaches kids to save. I think it gives them incentives to save and we know, I mean,꯫ You have young kids. I mean, that's not, it seems so far out of reach if you don't have some sort of incentive to do that. So I think it's a great program. And I think it'll get some movement.
Well, I hope so. And we were talking earlier. I have three kids. My oldest, from 25 to 31, and I only have one. He's pre-approved for a loan, looking for a house, but it's really hard to find one in that price range we were talking
Mhm.
about. But uh, if this could get them started at a younger age and it be a tax deduction, I mean that's just a great idea.
It's a no brainer. I think so too. I mean,
And
it is a no brainer.
how much, which I don't know if you really looked into this part of it, but this had to go through Appropriations and Revenue Committee, and that's where it stalled. I guess we didn't have the money to do it. Do you feel like there will be money in
Well, let's
next
start
year
by
budget
saying
year?
we have the money to do it.
Was they just didn't want to spend it this year?
They don't open up they won't open up the pocketbook unless they have to in that off year. So that's where those
Oh,
bills kind of go to die a slow death just because they're not going to even look at that. And I think that that's by design. I think that that's the way the short and long sessions have been set up. So this next session will be nothing more than, we've already turned in a bunch of budget requests. And getting those in as early as possible. They've given us a warning shot, all of us, that this budget we're already, I mean, they're even expecting a shortfall this year. So, but there's certain things to me that we don't look at as spending as more as investing. And I think a bill like 195 is investing in our young families and giving them the kind of incentives to save and actually become homeowners and productive citizens. So I
well,
think that it's more of an investment than it would be a spending bill. So, and I think we need to shift from that. I think a lot of things, if you look at it as just throwing money at something, I don't think that this is the case here. I think this is a
no,
definite investment in our young families.
no, and that's going to help on the back end property taxes too. So I mean,
Yep,
it is an investment. So there's a
it
return.
really, yeah.
Um, have you gotten any feedback from any financial institutions or agents or other stakeholders on this idea?
I have not, but I'm not on appropriations and revenue, so that is not abnormal. for me not to hear about it until it gets out of that committee. We have folks that will fill us in as these bills pass. I mean, we had almost, I think it was over 1,000 bills filed.
Yeah,
So we kind of, you stick with what committees you're on, or you'll lose your mind.
you're right.
But I have a really great colleague that I know is like very passionate about this housing crisis. That I'm sure that he will be watching it and keeping us in the loop on it.
All right, so we're going to move on to a few fun questions. And as you can imagine, this is about Jake from State Farm. So
He sounds hideous.
be honest, how often does someone bring up Jake from State Farm?
A lot, a lot. Yeah. I've given out Jake from State Farm costumes. I even think I might have a little, let's see. I've got a little cutout of Jake from State Farm here on my desk.
Uh-huh. All
So
right.
yeah, it was good. I don't know if it's as good as a lizard, but he seems pretty nice, solid guy.
Well, so you said you gave out some costumes. I actually, there was one question I got rid of about that if you had a costume. But
Yeah, no, I have not been Jake from State Farm, but Jeff and I have worn a Mahomes and Otto jersey to the Kansas City Chiefs Super Bowl party once. So I was the Mahomes Otto. So that was kind of fun.
so yeah, and since you brought that up, what is the connection between the Chiefs and is that where is there do they play in State
Yeah,
Farm Arena?
I mean Patrick Mahomes is a spokesperson for us. So he's one of our guys.
Gotcha. So if you could ask Jake from Farm one question, what would it be?
Um, do you ever wear blue jeans?
That's a good one. All right. Yeah. Actually, I
Or
would
is it just
say he
always
did.
khakis? Is it
Yeah,
always
yeah, yeah.
khakis?
All right. So, do you remember the
Do you
video
own a
game?
blue shirt?
Do you remember the video game Super Smash Brothers Melee?
No.
Okay, well, it was a fighting game of all the Nintendo characters. So,
Okay.
if one of the characters has to be Mario, and then you have Jake from State Farm, Flo from Progressive, and Geico the Gecko fighting, who wins?
Oh, definitely Mario. He's had more practice, right?
I thought you were going to toe the corporate line there and say Jake from State Farm.
Oh, he's not a fighter.
All right, so last question, and this is visual for anybody that is listening. You're not going to get to see it. So let me see here. Which one of these guys is really Jake from State Farm?
Well, the OG one is on the left.
All
He was the
right.
original.
All right.
And you know what? I'm not really sure why. I think because I think the character took off better than they probably expected it. And then that's why they went ahead and probably did some research on, market research
Right,
on what
right.
would be the most effective. And I'm assuming that's how we got our new Jake.
All right. So tell us how people can get a hold of you, either legislatively or if they're needing insurance, whatever the best way, and we'll close this thing out here.
Kaylin, I have to say, first of all, again, thank you for having me. I've enjoyed this, but I have had everybody reaches me. The only way I haven't been reached right now is by smoke signal. I have been stopped at the grocery store. I have been messaged on Facebook. I have my cell phone number is available for all my constituents. It's 502-229-6544 is my cell phone number. It's on all my websites. You can reach me at the Capitol. Um, if you're texting me, forgive me. My text gets so bogged down that I normally would rather have an email. My email address at the Capitol is Ericka, Erika.Hancock at kylegislature.gov. That way I can kind of keep track of it. But right now, if you know what, if however anybody wants to reach me is fine. I mean, that's the whole gig. I'm here to listen. I'm here to represent the people of Franklin County and be the best voice I can be for my constituents. So they can reach me however. Smoke signals will work, but I can't promise you that I won't drop the ball. I mean, but yeah, and anyhow, I'm here at State Farm. Come in. I mean, I'm available.
Well, I appreciate the work you do. I know being a state representative, of course, I've never been one, but I know you guys get paid very little for a lot of work.
Yeah.
And,
But
it's,
that's what public service is,
yeah,
Kaylin. It's not about the pay. I mean,
right.
when I decided to do this, it was because it was a good time for me and my family to give back to a community that we care about so much. And I do care about this community, and I truly care and want it to be the best version of itself. And I think that takes a level head and takes an open heart and an open ear to just listen and make decisions that make our county better.
Well, again, thank you for being here and sharing your
Yeah.
insights. It's always valuable to hear directly from our lawmakers and how policy, real estate, and the community needs intersect, especially for buyers and homeowners here in Franklin County. I'll have links to her contact information. And thanks again, and we'll have you back in the future.
I hope so.
All right,
Call me if
thank
you need
you.
anything.
All right,
Thank
will
you.
do.
Bye bye.
Bye. A big thank you to Representative Hancock for joining me today. Really great insights. All right, let's get back to our regular update with this week's real estate tip and some local events you won't want to miss. The real estate tip of the week: as the local market shifts away from the ultra competitive, fast paced sellers market we've seen over the last few years and moves towards more balanced conditions, buyers have a real opportunity to slow down and be strategic. More inventory and slightly longer days on market means you are less likely to face intense bidding wars on every home. That gives you time to schedule second showings, line up inspections early, and even negotiate on price or terms, things that were often off the table during the peak frenzy. But remember, balance doesn't mean soft. Well-priced homes are still moving quickly, so the best strategy is to get pre-approved, know your budget, and be ready to act decisively when you find the right fit. It's a great moment to buy smart, not rushed. There's plenty happening around Frankfort this week and next, so mark your calendars for the Thomas D. Clark Center for Kentucky History guided tours starting Friday, October 3rd and continuing October 4th. The Kentucky Historical Society will host guided tours from 3 to 3:30 p.m. The Thomas D. Clark Center is located at 100 West Broadway Street right here in Frankfort. Admission for adults is $8, youth $6, veterans $6, and is free for children under 5 and for KHS members. It's a great way to explore Kentucky's history right here in the heart of downtown. Mark your calendar for one of Frankfort's biggest events. Bourbon on the Banks 25 is back. From October 2nd to the 4th, the capital city transforms into a bourbon lover's paradise. Enjoy tastings from over 70 distilleries, breweries, and wineries, live music along the river, food trucks, artisan vendors, and more. The main event is Saturday, October 4th from 2 to 6 p.m. at Riverview Park and Ward Oats Amphitheater, with early access for VIPs starting at 1 o'clock. It's the best weekend of the year in Frankfort, whether you're a bourbon aficionado or just here for the music and food. There's something for everyone. Our featured listing this week is 508 Poa Drive here in Frankfort, Kentucky. It's listed at $339,900, has 3 bedrooms, 2 baths, 2,064 square feet in Cloverdale neighborhood. This beautifully updated split-level home blends modern style with a peaceful setting in one of Frankfort's most desirable neighborhoods. Inside, you'll find new luxury vinyl plank flooring, fresh paint, refinished kitchen cabinets, updated bathrooms, and stylish finishes throughout. The lower level has been fully repainted and features brand new flooring, perfect for a recreation room, home office, or guest suite. A professionally plumbed area is already in place for a future third bathroom, adding value and flexibility. Step outside to enjoy the Trex decking and a landscape yard that's been professionally maintained by the same landscaper for nearly 30 years. Located on a quiet street in Cloverdale, this move-in ready home is a rare find. This is listed by Penny Varble with transactionbroker.com, and you can reach her at 502-667-0177 or realtor.penny@outlook.com. Thanks for tuning in to this week's update. Next week, we'll take a closer look at the real estate market in Anderson County. If you're thinking about buying or selling in Central Kentucky, visit transactionbroker.com to connect with a local expert and explore your options. Be sure to subscribe on YouTube, follow us on Facebook, listen on Spotify, Apple, iHeartRadio, or Amazon Podcasts. We've got interviews coming soon with loan officers, agents, elected leaders, and local housing experts, so make sure you're subscribed and ready. And if you're watching on YouTube or the Frankfort Plant Board Leased Access channel, stay tuned right after this for a showcase of some of our featured listings. I'm Kalen Studler, broker at transactionbroker.com, and I'll see you next time.